Good morning. So we're gapping down pretty close to the where we bounced from a couple of days ago. Um, I think this markup from the last couple of days shows a pretty good picture um, of how much the sellers continue to be in control. So um, sometimes it's easy to forget on a micro level intraday when you see the market pop $2, $3 that sellers overall are in control. One of the hallmarks of bear market behavior is just violent swings in both directions. There can be a variety of reasons for that. The most common one, in my view, is as the market shows signs of more weakness and these swings start to, when you see the first signs of swings early on, it becomes a bit of a self-fulfilling prophecy. The way markets are organized is there are firms that commit capital to make markets to be on both sides to buy and sell. And as the swings become more wild, they need to widen out where they're bidding and offering for stock to cover the risk of those swings. And as they widen out those spreads, there's less liquidity to absorb sell orders that may come in, large sell orders or large buy orders. And so then those swings continue to perpetuate, creating more nervousness, creating spreads widening, et cetera, et cetera. And so certainly that's what we continue to see. Just looking at the last week, I haven't gone back and checked this in the last 10, 15 years, but I don't recall the number of downtrend days just in the last, I think it's been four times in the last 6 days. 1, 2, 3, 4. In a couple of days of, I guess you could say, this was a day of rest right here where we just stayed tight for the break to the upside the following day. And then yesterday was another tight and then the break. So this actually outlines pretty clearly a couple of the different types of trading setups that we also see in the market like this. After you see the big downtrend day, normally you don't get another follow through downtrend day like this right here. This is kind of unusual in the sense that we came off so much after this big down day here. What you normally would see is after a big down day is even if you go lower the following day, you get kind of some resting action, and then the following day you get a break to the upside or a break to the downside. And then we saw this again. Here was the big downtrend day. We double bottomed at 255. We had the bounce up to 258. The next morning we came in, kind of held on the open here, failed at 260 in the late morning, and we continued to support this 258, which had been support the prior trading week, the bottom of the support. And then we broke to the upside in the afternoon. And so this is closer to kind of more normal action you see after a big trend day. What's on top of mind right now is if we go back to the prior week and we look after these two big downtrend days and we set 258 as support and then the next day 259 as support, this acted as pretty good support for the entire week. And we came in on Monday, that got taken out. We started to hold above it yesterday. So now that we're down here, the question is, do we start to get a repeat similar to the prior week in terms of we're establishing a support area? We have the 255 kind of low, and we did flush through it, but basically it was, if you zoom in on it, you can see 255 was kind of where the bounce started from to this 258, and then we have 256 above it. Actually more like 255, 40. So now does this start to act as, we've already touched it in the pre-market. We've touched 255.40, which was the kind of the pullback low here before the end of the day, $3 ramp. Let's zoom in. So I was not on the desk at 6:30, but 255 and a half and 255 are areas where you would be looking to see if we can bounce from there again, just because the upside, it's a good risk reward back up to 258. 258 is the first kind of legitimate, really good spot in terms of a risk reward today for a short entry. If we rally back to 259, that would even be a better potential spot. So these are the two spots. And again, this is bigger picture. There's different types of trading obviously going on the desk, and different types of trading off the desk for guys who are trading SPYs, market ETFs, VXX, and volatility ETFs. There's three. Without getting into detail today, those of you who've taken our training, you've seen I do a lecture on the three different types of intraday trades. The two that are applicable right now really are the kind of the micro scalp trades, where Swang is the most, in real time when you're looking at people trading, he's the most best classic example of that. Maybe he sees a little bit of a buyer here, 250, 6.5, and he's in for a quick 30, 40 cent scalp. He sees a buyer here again, he's in for a quick 30, 40 cent scalp. So that's type one. That's the lowest time frame. The next one is more of an intraday kind of move to move, larger move trade where they see the buyers at 255.5 in the pre-market, and they're trying to make a bigger, a capture move back up to 257, where kind of the down move started from here. So $1.50, maybe even a move all the way back to 258. And so those are really the two operative type trades right now. The bigger picture, longer hold swing in this environment where things can change minute to minute is not as applicable. It was more of a 2017 trade. And so you're going to see people making very many different types of trades. Understand that depending on the type of day you have, a compression day after a large trend day, which we had yesterday, you might be looking for a pop back up to resistance, a pop to support, back and forth, back and forth, back and forth. When the market starts to get overextended to the downside, then you might look for the larger 30-minute move, hour move, like we saw 2 days ago after we had come down. Well, first of all, below 260, obviously the first one moved down to 258. After we bottomed here at 55 the second time, I moved back up to 57, 58. Those would be, once you've already seen this big extension like that. First bounce attempt failed here. When we were an ATR below the 200-day, that took over. All right, so the way that I'm looking at right now is, as I mentioned, 258, 259, those are more of the ideal kind of entries on the short side. 256.5 pre-market. This is interesting. It held 4 times. Even more interesting to me would be the pre-market low. If you short on a failure to 258, comes into 257, covering here is a smart thing to do. If it slices through easily, this is your next level. But those are the 3 levels I'd be looking for on downside. All right, let's take a quick look at some of the other ETFs. IWM, let's go to the 30-minute. We still have our markup from yesterday on here. We actually did get above 150 right at the end of the day. We're coming into 147.50. So we zoom out even a little bit more. So the low this was the wild February. This is definitely an area here that I want to watch and see if this IWM can get its footing in here. But failure to hold below 147.80-ish, kind of where 2 days ago it flushed through and got back up. This is, if it starts to hold here and consolidate in this range for a while, and then you get a break to the upside, you could see a move right back to 150. Below that is like 147 or so. VXX. So VXX is nowhere near where I tried to short it a couple of days ago right now. I shouldn't say nowhere near. It actually was there in the pre-market. So it double topped a couple of days ago around 53.80. And it was there at 6:30 this morning when the market bottomed. So to me, 53, I think I probably put an alert at 53.5 for myself. Anywhere like above, anywhere in this area here, I'm looking to see some type of failure. Obviously, the end of the day move when it fit double top there was a $2 down move, and then we saw some down move. Yesterday, I guess the trade I put on was I put a script in the pre-market we talked about in the morning meeting, was just buy 50 for quick scalp. Went up a dollar and change, but that was the trade. At the end of the day, it did come back down. I didn't try it again and actually went through 50. So for today, a scalp on the long side. Probably somewhere in the 5160s. Definitely no higher than 5180. This area right here. All right, so look, with the market, with the size of a gap down and the kind of the moves that we're seeing, you could focus entirely on market ETFs. I wanted to highlight two stocks that seem to be impacted largely by the tariff news, and then one that just has its own kind of guided down a little bit. Like the CLDR guided down 5% on the revenue side. Now, anytime a stock is a high growth stock like this and they do a guide down, it can get hammered. It does seem pretty severe. They're still growing around 30% a year. So it's worth watching this. Maybe it flushes a dollar through the prior low, and you can use this getting back above the prior low as some sort of inflection. I did see some lower price targets, but certainly, from $13, $14, a bounce back up to what I put on resistance. $16.75 is the first real kind of resistance. But even from like 14, playing a bounce back up to the mid 15s, it's pretty good risk reward. Then you kind of see what happens from there. Next one is CAT. It's down $5 right now. This one's down about 20% from the high. And obviously, it was in a massive uptrend, which accelerated. And so it's normal when things are in an uptrend like this to, when they get steep, for this to break and for it to come back into the trend. Now it's gapping below recent low, it looks like. It's 140 right now in the pre-market. So people are going to kind of watch, see what does it do against this 140. Does it actually come below, start to hold below it? I kind of feel this way, the same way I did about when I bought Boeing the other day at 312, which is you really do want to find spots to get these for longer term trades. So looking at the last kind of up leg, it consolidated a while for 135 to 139. So it seems like it definitely can get inside of this consolidation range today. So it's on my radar. I would nibble into it on a flush, about another dollar down, start to nibble. And then if it got closer to 135, 136, I'd probably look out a couple of months and buy some 150 calls for a bounce back up into this area here. Maybe sell some 160s against them, something like that. On the Boeing side, I picked this up. It's almost down to where I bought it a couple of days ago. So I bought this at 312 here on the open. I did sell half of it as it bounced back to 324 to 330. So my break even now is probably around 300. I actually would like for it to get closer to 300 because I would put on some more risk. I still do think this thing, it's another one that eventually I expect it to get back up to the highs this year. So the closer it gets to 300 with 20 to 30% of upside, the more aggressive I'll be with putting on longer term long position. Let's zoom in. It just seems like in the pre-market, it's this is again where I entered a few days ago. It's like 312 by 318 right now. Maybe we get a flush right on the open below this 312 support closer to this area here, and play a bounce back up to 315, 320, cover some risk, and kind of see what happens. So I just wanted to throw a couple of, Facebook on here. I just noticed that it's, it was protecting the low 150s, but obviously, as long as it's below 160, there's danger of that flush through 150 again. So it was down, it's close to 150 here. You did get your retest. It's worth noting that, if the market gets hammered to that 255 again today, you could see this coming into here. And if we actually cracked the 255 on the SPYs and really came off for real, you'd probably get a flush through 150. But this 155 resistance, I have like 154. Did I put on the sheet 154, 155? Okay, 154 and a half, 155. To me now, does this start to act as resistance? And then I wanted to put Bob on here because this was getting hammered actually down to areas that interest me. Let's take a look at the daily. And this is another, to me, another longer term play. I think Bob eventually will get back above 200. It's digesting a really large move here from, this was the kind of the uptrend, but this is kind of where it started on this gap up on earnings to 140, and it gapped up again on earnings to 165. We started talking about it here, about it potentially moving to 180, 190. It eventually did get up to 200. So this is just, what this is really is a larger, longer term digestion. We saw it at Netflix a couple of years ago, where this consolidation is likely to hold and eventually break to the upside and go to like 220, 230, 250. So this is worth paying attention to as it gets closer to the bottom of this longer term consolidation. So 166 is a low here. So I actually have I've got 166 and a half and 165. So yeah, if this flushed on the open to the 165 area, I'm gonna nibble on the long side on this one. Yeah, I don't really have a lot of thoughts on Tesla. I think there's probably things that are a lot easier for people to trade. I have talked about it a couple of times already. I think that the news was good yesterday, that they don't have to raise cash this year. I think buying it close, between 250 and 254 seems like a good longer term play to me. It wouldn't surprise me if it got back up to 280 over the next few days. I'm sure some people, it's 30% short interest. The market is certainly helping it. It got it back above 270 in the afternoon yesterday. It's gapping down today. But this 254 to like 250 area it kind of reminds me of Facebook a little bit. And again, it's very heavily shorted. So if it gets if it bounces from this area again, it very quickly could get back up to much higher prices.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.